Welcome to the Fund Your Retirement podcast.
When you identify a stock and to put your hard-earned capital, what sort of things are you looking for?
Well, pretty much I look at it from a reverse point of view, is where not to invest. And that's where I start.
That's a good opposite, isn't it?
Yeah, it is.
Most people think, where should I invest? Well, actually, you start with, where shouldn't I invest?
Yeah, you look at just the London Stock Exchange, which I think about 2,400 stocks, and then you've got AIM that's got another 800, something like that. You think 3,200 stocks. Where do you go? Well, about 450 of those are investment trusts. Yeah. So I don't bother with any of them. So they're whatsoever. I try invest in business. Well, I do invest in business that I understand. I'm not an expert in the field, but at least I can understand what they do. That's the thing.
Yeah.
So there's a lot of things I don't understand. I don't understand software, for example. I won't be able to tell you who the competitors are, the risks to your business or anything like that. I just haven't got a feel for it. I don't invest in what I call people businesses. That could be things like recruitment or marketing, courier businesses, legal services. That's another chunk.
Yeah. Okay. So all these have been removed out of the
non-food retail. Yeah. Anybody trying to sell a sweater or anything like that.
Don't bother with them.
No, because somebody else can do that quite easily.
Yeah.
Property businesses. I don't bother with those. Restaurants, they can be very trendy and they can be very passé the next couple of years. Yeah. Airlines, they've got a rich history in going bust. I stay away from that.
Yeah.
So when you take all those out,
it narrows the universe down.
Well, it does. It does, and that's not a total list, but you're probably down to about 100 or something like that. Yeah. And I then start looking at things within those. And
welcome to the Fund Your Retirement podcast. I'm Lee Cleesby, the co-founder of Fund Your Retirement, welcoming you back to your weekly insights from our expert guests in finance, business, and wealth building strategies, helping you fund your retirement. Mark Atkinson is a self-directed investor who achieved financial independence at the young age of 53. Mark isn't an ex-corporate CEO. He didn't exit a multi-million-pound business or win the lottery. Mark quite simply saved and invested those savings into the stock market over his 30-year working career. And Mark now enjoys traveling with his wife, managing his portfolio, and enjoying the freedom that financial independence brings. Hello, Mark. Thank you for joining us. Really appreciate you coming on the show today.
Yeah, it's a pleasure, Lee. Been looking forward to it myself, and looking forward to this fireside chat. Let's see where it takes us.
Yeah. I know we've had it scheduled in for a while, but due to scheduling differences, we finally got here. So I want to know, how did you get started in the world of invested? How old were you when you selected your first stock and made your first investment?
Right. Well, that is something that it was only quite recently that I look back on, and I can probably take it back to being a teenage boy.
Right.
Because I did reflect on this, and it certainly has been a life-changing activity. I won't say a life-changing event, because that suggests that one thing's happened and the next day that your life's quite different, like winning X Factor or something like this.
Yeah.
But it was certainly something that over a period of time has changed the path of what I've been able to do with my life. So it has been quite a significant
impact.
Interest that it has. Yeah. And I can go back to being a teenage boy. I was instead of having school meals, I used to go to my grandmother's for lunch.
Yeah.
Instead of going to school, and I would read the newspaper there, like a lot of boys. Start at the back page on sport.
Yeah.
Then work my way into the
move in.
Yeah. Football, cricket, whatever. Always very interested in sport.
Yeah.
And then work my way into the paper from the back, and I very quickly came across the business pages. Found myself reading those, and for some reason, being interested in what was going on in the world, and how these companies share prices were going up and down, and what it was all about. And that was a daily routine. And had I gone any further into the newspaper, I might have had an interest in ladies' fashion or scatter cushions or astrology or something like that. But I never seemed to get any further. So it was, I can look back and see it was a peculiar interest to have as a teenager. Some boys, they pick up a guitar or start messing about with motorbikes, but I'm reading about the stock market and businesses with no outlook for it.
Yeah.
So we fast forward a few years, and I go into the world of work in 1984. into a sales office. And the first thing that hit me pretty much was what a long day it is. And it is, people laugh about that, but you get conditioned to it over a period of time, don't you? That's the world of work.
Yeah.
And but it is. And if you look at how little time that you've actually got for yourself, it's not very much. You're trying to snatch a few hours in the evening. It really did strike a chord.
Yeah.
But you get into the swing of it. And then after a few weeks, a gentleman came down from another department, and people were shaking his hand and asking him all kinds of questions. And this what looked like a pretty old chap. He was coming up to retirement.
Yeah, okay.
He was saying goodbye to everybody. And people were saying, "Oh, what are you going to be doing with yourself?" We said a bit of this and a bit of that. And I looked at him and thought, he doesn't look like he's going to be fit to do much.
Right. Okay.
And I thought, is this the deal here, that you're in this kind of wage cage for the next 50 years? And there I was, full head of hair back then, and apple cheeks. And I thought, is this the deal? So still in that year, getting on to answer the question, how would I get involved? The government floated British Telecom.
Yeah.
And that was open to the public. And that was in the day you cut out the form out of a newspaper and send your check off. And it was heavily drawn back when I was allocated some shares. And then I was up and running pretty much.
Was that your first purchase then?
Yeah, that was the first purchase in 1984. And then subsequent to that, there were other flotations, other privatizations that are participated in.
Yeah.
And that was really a gateway into widening into the wider stock market, which I did probably 2 or 3 years later on, where I actually walked down to the bank, went in and said, I want to buy some shares. And it was a company called Anglo-American, who were based in South Africa.
Mining company.
Yeah, that's right. What did I know about gold mining as a 20-year-old? But nevertheless, they seemed to do okay.
Was it the shininess of the gold?
Yeah, that was it.
The allure of the gold.
You look back and you think, how little I knew. And I'm probably look back in another 20 years and think how little I knew now.
Yeah. It's a constant involvement, isn't it? So it's a fascinating story. Your interest came from somewhere, reading the newspapers, obviously, but then the recognition of seeing the gentleman retiring suddenly was a bit of a aha moment for you, I'm guessing, thinking, I don't want that to be kind of how my retirement goes.
Yeah, I thought, is that I want to beat the system, really, or use the system in order to give me the flexibility to be active, to do things.
It's a great point.
I mean, we talk about retirement, and the actual word is a little bit misleading, because it's not an enticing world, is it? Even retiring early, it doesn't suggest that you're going to be, like I still go running most days. I'm playing squash once a week.
Yeah. You're still fit and healthy. You look great as well.
Thanks very much. Flattery will get you everywhere.
Yeah.
But just going back from those days, it really did strike a chord, because these people who were coming down every few weeks were pretty much a carbon copy of one another. They'd be there and they'd say, you must keep in touch, and then they'd shuffle off down the corridor with their carriage clock in their hand and be forgotten about pretty quickly. But since then, the conditions, I thought, is that the deal? Well, the conditions have changed a great deal in the world of work. You've had the retirement age, your state retirement age, that's gone out. You've had final salary pensions, they've disappeared.
Pretty much so, yeah.
0-hour contracts have come in, erosion of overtime rates and weekend rates of pay, redundancy packages, fringe benefits, presenteeism.
Inflation now is a big problem as well.
Yeah.
Eating into people's disposable income. Yeah, all these things, all these factors, don't they?
Yeah.
I had a gentleman on recently, Robert Dubin, and he retired in his mid-40s. I say retired, and he said the same thing. He preferred to use the term financially independent. Yeah. And he'd achieved it in his mid-40s and went sailing off around the world. He was young enough to be able to do that, which is kind of, similar thing to what you're saying. So brilliant. Yeah. So you mentioned there that your first purchase was BT, which was government-backed company onto the stock market, privatized it. And then you mentioned Anglo-American in your early 20s, which you didn't really know what you were doing.
No. It was more out of, I did well in the early days, more out of good luck than really good management. I've got to be honest with you on that.
Well, that's good. And sometimes you need a bit of luck, don't you? Everyone needs a bit of luck. Everyone needs a bit of luck in life.
It encourages you.
Yeah, definitely. So how has your approach and your methodology developed since then over the years then? How did you develop your strategy then? Because I'm sure you haven't just rode your luck over the past like 30, 40 years, I'm presuming.
Well, a hallmark of it is long-term investments.
Okay.
Not always swapping and changing.
Interesting.
Sticking with a business. If you feel that it's a good business, just stick with it. There's a difference between I'm an investor. There's investors and traders. Traders are people who are always in and out and they're stuck in front of a computer screen all day. That's not what I want to do. I want to find good businesses and just stick with them. So there was an element of that. Once I had a stock and I was convinced in it that I would stick with it, often through thin as well as thick.
Yeah.
But what the biggest change, the biggest change as a private investor has been the tools that you've got at hand. I mean, I mentioned to you about with that Anglo-American, I had to go down to the bank and buy the stock.
Yeah.
Now, with the internet, as a private investor, the gap that has narrowed between you and professional fund managers is it's really narrow now because you've got the information at your fingertips. Sometimes a little bit too much information. I mean, going back in the day, you'd look at the share price and then you wouldn't know until the newspaper came out the next morning.
Right, yeah.
And then you might see that it made a sudden movement of 5 or 10%, and you wouldn't know why because you didn't have visibility of the RNSs.
Yeah.
So you'd probably be scouring every newspaper. If it was a small cap, then it probably wouldn't be covered at all. So you've got a lot more information at hand. It's fantastic. It really is. It's a game changer.
It has been a game changer, hasn't it? And it's allowed what was once the domain of the large institutions.
Yeah.
It's become a bottom-up sort of transition, hasn't it? Because the smaller investors can get involved with access to almost the same information as the large institutions once used to have.
Yeah, there's a lot of mythology peddled. You can now see behind the wizard's curtain as a private investor that you can do it as well. It's not just for the great and the good in the city of London, that you can do it basically from wherever your living room is.
Yeah. So you mentioned there when you were describing your stocks that you stuck with them through the thick and thin.
Yeah.
What metrics do you look for when you're selecting these stocks? So when you identify a stock and to put your hard-earned capital, what sort of things are you looking for?
Well, pretty much I look at it from a reverse point of view, is where not to invest. And that's where I start.
That's a good opposite, isn't it?
It is.
Most people think, where should I invest? Well, actually, you start with where shouldn't I invest?
Yeah, you look at just the London Stock Exchange, which I think about 2,400 stocks, and then you've got AIM that's got another 800, something like that. You think 3,200 stocks. Where do you go? Well, about 450 of those are investment trusts. Yeah. So I don't bother with any of them. So then there's things like technology that I don't understand whatsoever. I mean, I try invest in business. Well, I do invest in business that I understand. I'm not an expert in the field, but at least I can understand what they do. That's the thing.
Yeah.
So there's a lot of things I don't understand. I don't understand software, for example. I wouldn't be able to tell you who the competitors are, the risks to your business or anything like that. I just haven't got a feel for it. I don't invest in what I call people businesses. That could be things like recruitment or marketing, courier businesses, legal services. That's another chunk.
Yeah. Okay. So that's all these have been removed out of the
non-food retail. Yeah. Anybody trying to sell a sweater or anything like that.
Don't bother with them.
No, because somebody else can do that quite easily.
Yeah.
Property businesses. I don't bother with those. Restaurants. They can be very trendy and they can be very passé the next couple of years. Yeah. Airlines, they've got a rich history in going bust. I stay away from that.
Yeah.
And anything that's pre-profit, I generally wait late in the trajectory to, actually say that they're making a profit, because there's a lot of companies out there on the market that's perennially making losses. And there's a lot that not only are they making, they've no profit, no turnover. You look at exploration, that's another one I avoid, somebody who's mining for a particular product, they're burning cash and they've nothing coming in through the front.
Yeah.
So when you take all those out,
it narrows the universe down.
It does. And that's that's not a total list, but you're probably down to about 100 or something like that. Yeah. And I then start looking at things within those. And I like companies that obviously got to make a profit, but hopefully they pay a dividend. I think that's a good discipline to have.
Yeah.
I like to see strong management. I like management to have a share in the business, significant share, or not just options, but they've got, use that phrase, skin in the game. Because I think, well, it's in their interest for this.
It's in their interest for the company to succeed, of course.
That's right. Yeah,
makes sense.
Yeah, so those are a few things. So it's pretty quick. You pretty quickly start narrowing down the things that I can look at. I've added more. I would imagine there's about 100 or something like that, and I go fit. That's more than enough for me to get into.
Yeah, and then so you get your teeth into that kind of, as you've said there, 100 profits, strong management. They actually produce something. And they produce a dividend as well.
Yeah. Companies with lots of intangibles, I'm always a little bit, they can be very profitable because they've not got a lot of moving parts, but I'm always wary that the barriers to entry aren't very great, as I said, just take something like I'll say a courier business, you buy a van and you've got a driving license and you're probably 90% to getting a courier business started of some description. Yeah. Hope I'm not being offensive to any couriers out there.
So as Warren Buffett would describe it, as a moat around the business.
Yeah, some element, yeah.
Some element of a barrier to entry.
Yeah.
And once you've now lit down to 100, you mentioned you're a long-term investor. What sort of time horizon are we talking? Are we talking 2, 5, 10, 15? Or...
No, I'm hopefully forever.
Oh, right, okay.
Yeah, hopefully, if you look at a business like, say, Mars Corporation and incorporated in the US. That's a family-owned business from the early 1900s. They're not buying in and buying out. It's been a successful business over 100 years. So just stick with it. I'm buying a part of that business as if I was a business owner.
Yeah, and that's an important thing. I think a lot of people don't realize that, isn't it? That when you buy a share of business, you're actually buying a piece of it. You become a part owner, don't you?
Yeah, that's absolutely right.
And then if they pay dividends, you get a return of that profit and also a potential of the upside as well. So the longer that business has been around, the potential that has to continue growing as well.
I mean, every time you're swapping around in your portfolio and jumping out and jumping back in again, you're incurring costs. You're incurring stamp duty, the spread, the buy and sell spread, and the dealing costs, and that adds up. So every time you're doing that, that's all hitting the end result. And I don't know if it's true or not, but I've read articles in the past that the best investors are actually people who've deceased.
Right, because they're not touching it.
No, because they're not touching it. Not messing around with the portfolio. One stock does particularly well, and they're not tempted to top slice or anything like that, and it just runs on. So probably the best thing to do is that I'm like Tom Hanks and get sent on a desert island somewhere for 5 years, and I'll probably come back and I'll have done better than if I've been meddling around with it.
Yeah. Well, I mentioned Robert Dubin's podcast a little bit earlier. When he went sailing, they had enough funds for 3 years. And then after the first year, because they were sailing and they weren't messing around with the stock portfolio, etc., and because the cost of living had come down so significantly, they had more money after year one than when they'd actually set off, because the stock portfolio had increased. By year 2, they had more money again. Year 3, more again. So they decided to carry on. 17 years later, they came back.
Well, throughout, when we look at performance in the workplace, it's all about activity, isn't it? People listen to how active they are instead of how, what's the end result. And, I always try and look at it the other way. Why am I getting the result? When I've looked back and you start thinking, what's made me, if I can say so, successful or relatively successful, it's that I'm not messing about with it. So let's stick with that and let's really concentrate that as a kind of a mindset, is not to keep interfering with it.
So we get back to more your methodology or approach. How many stocks do you kind of on average hold in your portfolio?
Well, I can tell you exactly how many it is. It's 36.
36.
Which is quite a lot, really. But because I've held, they've all been in the portfolio for at least 3 years. The last edition was 3 years ago. I feel like I got to know them reasonably well, or in certain circumstances, very well. So if I look at another business, I've got to be quite convinced that it deserves a place in the portfolio. And I would probably start off by taking an initial holding so I could have a closer look at it and then probably build, if I'm convinced, build from there. But I've actually trimmed in over that period of time. I've actually had one takeover.
Right.
That's gone from the portfolio. I've trimmed 2 small positions. One was disposed rather than trim. One was one that I just took an initial holding, wasn't convinced, got rid of it. One was one that went sour on me. And there was one that was a strategic change. So as you can see, there's not a lot of activity.
Over the years, you've been through the dot-com crash of the 90s, which was a pretty severe market correction. And then obviously there's 2008 financial crisis. And then obviously at the moment, we're dealing with the terrible events happening in Ukraine and things like that. So 3 very significant events that have affected the stock market. How did you deal with the portfolio? I'm presuming decreasing over those periods. How did you deal with the fear that was around during those times from the media of especially 2008, where it looked like the financial world was about to collapse?
Yeah.
What was how did you psychologically get yourself through those
easy
times?
It really is, because when you've been through it so many times, you just get used to not being surprised, and you just try and take it in your stride.
You almost block out the
the
noise.
Absolutely. I've got to say this, and it's very sad what's happening in the moment, but it's when I'm personally at my best.
Right.
Is when the market's going down, because you get that general. Obviously I've been through no end of slumps, corrections, and that's part and parcel of investing. You've got to see that this does happen. You look at history, and it keeps repeating, so you've got to be prepared for it.
Yeah.
And what I've got an advantage of as an experienced private investor, there's other people out there, they've never seen it before, and they panic. It's their first time. And then you've got people they have seen it before, but they continue to panic. That's just the way they're built.
Yeah.
And then you've got professional fund managers who are being they're having their performance assessed, perhaps every quarter or something like that. And they're being dragged in by a line manager, and why are you doing this? And they end up doing silly things. And a lot of good companies have their price written down, and that's where I can move in and top up. And a lot of the time, the fundamentals of the business haven't changed.
Yeah.
So that allows me to keep adding to the current position.
So you actually look at this as a potential, look at these types of situations as an opportunity.
I'm not saying I'm enjoying the situation, what's happening for other people. All these situations, it is an advantage for a long-term experienced shareholder.
Yeah.
I mean, you look at, I mentioned 1984. That was the launch of the FTSE 100 back then. And that was the year that I first started investing. That was set at a base level of 1,000, right? So ever since though, I've been reinvesting at 1,100, 1,200, 15, 2,000, 2.5, 3, all the way up to where 7,700, something like that.
Yeah.
So if it comes off from 7,007, or 7,000, 1,000 points are knocked off, I'm not really bothered. As I said, a lot of the time that the businesses are still profitable. As long as human beings are going to be around, there's going to be commerce. There's going to be trade. That's what it's not going to come to an end. One business that I've got in, just take it as an example, somebody called Unilever.
Unilever, yeah.
Everybody's heard of Unilever.
Of course, yeah.
Right. So the Lever brothers started the business in 1885 in Warrington. They'd had a grocery business and they went into soap. They bought a soap business. So we'll fast forward about 40 years, get to the First World War. So they've got to come through that. Yeah. Then they have a depression. Then we have the Wall Street crash in 1929. They merge with Unia Margarine of Holland. So that's a great time to make a move like that. Then you have the Great Depression, World War II, Cold War, Korean War, Suez. What comes after that? Vietnam War, Cuban Missile Crisis.
Yeah. Fall of the Soviet empires after
Vietnam War, oil crisis, inflation at 24%, winter discontent, 3-day week, Black Monday, Black Wednesday, September the 11th, banking crisis, Brexit, COVID, Falklands, Gulf War, Afghanistan, Syria.
.com crash, financial crash, 2008.
Yeah, that's it. And they're still here.
Yeah.
Right. They're still making product. Now, as an investor, if you're waiting for some benign world conditions to exist before you're going to commit to the market, it's never going to happen. There's always going to be something around the corner, and if you're one of these people who are always at any one of these events that are very, very regular, you're selling and trying to get back in, I think it's just foolish.
Yeah,
I really do.
That's a great sort of actual insight there, isn't it? Because the way you've just described it there is the amount of significant events of the last 100 years.
It's mind-boggling.
It is, yeah.
I mean, we've had COVID. In the First World War, we had Spanish flu, and that gets forgotten about because it's dwarfed by the First World War.
Yeah.
But I mentioned Unilever as an enormous business. It's one of the biggest ones in the FTSE. But you go into any medium-sized town in the UK, and you'll find businesses established in 1930, 1920, 1910. They can withstand a lot of things that are thrown at them. They're very different to how they started, but businesses can adapt.
Yeah. So I'm guessing, as you mentioned there, inflation was running at 25% in the 70s. Current inflation rates, although probably are a concern to you in terms of your investment portfolio, not that much of a concern.
No, because what else am I going to do?
Your companies are still producing product and still.
Yeah, well, hopefully, whatever they're producing, they can push that price on. Some of them have got strong negotiating power, so they are price makers rather than price takers. So hopefully, and just look at history. Businesses can withstand a lot of these things that are thrown at them.
No, it's brilliant. I mean, we've covered a lot there in regards of, I believe, your insights of how you select stocks and what you look for, and how your mindset of how you got yourself through these decades of various different events as well. I want to move the conversation along a little now to when you actually stepped away from work, because you have worked through all this as well, haven't you? You've had a full-time successful career as well in sales.
Well, so somebody else might have a different view of that. But
I'm sure it was.
I've remained employed anyway. Let's say that.
I'm sure it was successful. So when you stepped away, how did that affect your identity? Was there any psychological impacts of that in terms of one day you were working full time with your team and you were going to a place of work, and then now you've moved on to the new chapter. How did you transition into that?
Like a duck to water. It was absolutely fantastic. It has been.
Was it pre-prepared? Did you anticipate?
I did have a target, but that it was brought forward. I think for me the concern was that I was potentially coming out of the workplace was messing about with because I've been financially independent for some time.
Right. So you were able to move away earlier than you.
Yeah. And you look at your returns, your total returns, and the first time when it exceeds what your income is, your salary, that you look at that and you think, well, that's a
nice.
That's a red letter. Well, that's a red letter day, but one swallow doesn't make a summer. So you wait for some consistency there, and I used to play cricket, and it's like a declaration. You want to make sure that you've got enough runs on the board before you call time. You want to make sure that you're in the right place before you can actually pull the plug and say thanks very much, but I want to do something else with the rest of my life.
Yeah.
But my major concern, and what probably made me hang on a little bit, was the very thing that I've been planning to get away from. This is the paradox. Was part of the formula of how I did the investing, because you're surrounded by colleagues and people, and you're talking to customers, and you've lots of information sources coming into you about just by a process of osmosis. Sat in the office hearing about where they've gone for their holidays, or what they've bought, or what's the latest thing, what people, the energy providers that there's, how many people are moving over to electric cars. You're just aware of the world that how it's changing. And my concern was that if I stepped away from that, if I can try and use an extreme comparison, for example, say somebody got who was mentally alert but had to go for some reason into a retirement home. I would wager that pretty quickly their grasp on what was happening in the in the outside world would dwindle, even though that they're active, because they're not getting the information. They're not hearing about what's going on, because they're speaking to other people and what's new today, and it's pretty much the same as last week.
Like having, say, the internet cut off to your house, you've lost that channel of information.
So that was, losing. So that was a concern. So what I have actually done since that is he's done a lot, reached out and done a lot more networking. Hence, I'm speaking to you today.
That's exactly how we started chatting,
things like that. And people have found me. I'm a lot more. I can afford to be a lot more visible now. When you're in the workplace, it's probably not advisable to flag that you're, financially independent or nearing it. I don't think it's something that they will be very pleased about, really.
Maybe a little bit of jealousy as well.
Well, perhaps. So there is that, but it is a problem, and I'm hopefully young enough to throw myself into to some of the interests that I've got. I mean, I do know some people that they are lost. Their identity is through their job. That I am a managing director, I'm a doctor, I'm a whatever it is, I'm a sales manager. I've got so many people underneath me, and these aren't things that are important to me. It's my time, and the freedom to do what I want today. Within reason, that I can do that. That's the main thing.
Yeah, well, that's.
I mean, a lot of people particularly if they've commuted, if you worked a long time, they've commuted long distance. As I said about at the top of the interview, about not a lot of time in the evenings. They've not had the time to develop hobbies or interests. So they retire, and it's a case of, well, what do I do now? Well, that's certainly not a case with me.
Yeah, you've developed your love for traveling, you and your wife, haven't you?
Yeah. Those are things we. Well, there's
the pandemic.
Apart from that, but let's put that into perspective. I mean, we went to Mauritius for part of the winter, as we're doing this winter again. That breaks things up a little bit, but given the problems that other people have had through the lost loved ones and what have you, what I've had to put up with is very, very little indeed.
Of course. It's about putting things into perspective, isn't it?
Absolutely.
And that's the reason why I wanted to bring that up to the audience, of how you've developed that transition and how you've become comfortable with it, because I'm aware that a lot of people, as they go through that transition, they do struggle with that identity change. So
I mean, it's an overnight thing, isn't it? It's an overnight. You're going. It's probably a good thing that in certain circumstances people taper out. They go down to 4, 3, 2 days. But sometimes it is kind of night and day. They go from working to not working.
Yeah, brilliant. So as we come to the end of the conversation, what type of advice? I'd like 2 pieces of advice off you. First of all, actually.
Yeah.
One for the younger generation who perhaps maybe is just starting out.
Yeah.
What would you share with them? Because I know that we said at the beginning that there is an ideology or a bit of a belief in the younger generation that they're going to be working until the 70s.
Yeah. Well, it's not necessarily written that you're going to have to work forever. It's not in tablets of stone. I hear people say that, but don't think about the state retirement age about when you need to retire. That's the thing. And retirement isn't necessarily just sat in doing a jigsaw. You can be active and what have you. And so do something about it. Yeah. I started relatively early. I started investing at 18. So that has allowed me plenty of time to start for that compounding. But in a way, I lost 18 years. So the sooner that you can start, as a parent, putting something aside for your children to get that rolling, the heavy lifting is it really in those years. And by the time I got to my late 30s, so it's not just the retiring. By the time I got to the late 30s, I could see the traction building of the work that I'd done. And certainly by my mid 40s, I could see the light at the end of the tunnel. It wasn't endlessly stretching out in front of me. So if I'd had a bad day or going through a bit of a bad phase, I thought, well, it's not forever. It was very comforting.
Yeah.
So just make a start. To anybody young, and you might think it's an amount that's an insignificant trifle, of an amount to get started. One thing, you've made a start. You've made a statement that you've started with whatever amount it is that you can afford. Hopefully you'll see that grow, and it really is the small amounts that you put in the early years that outstrip what you can do at the back end, because then you're playing catch up. But it's never too late.
Yeah.
Well, I would say to people, just get started.
Yeah.
The longest journey in the world starts with a single step, doesn't it?
Yeah. And you started off just by reading those business pages.
That's right. Yeah.
And that could be the start. That's getting started, isn't it?
Just having an interest.
Just having an interest. It doesn't have to be you put in 1,000 or 10,000 or 100,000 into a stockbroker account or a mutual fund account or whatever. It can just be, just start reading up on some companies. Brilliant. And then the second piece, for those who are now coming up to that, I don't like to use the word retirement, but we have done.
No, I'm still groping for a better word for it, but I can't find one.
No,
but,
I know. Financially independent.
That's right. Yeah, because it does. It's not an enticing word, is it?
It isn't.
No. It has. It's. We think about retirement homes and things like that. So hopefully that's a long, long way away. Yeah.
Yes. So we're going to say financial independent.
Yeah.
For those that are approaching that, is there anything you could share with them who have that kind of concern, how they're going to transition, change of identity?
Down from person to person, really, I think, isn't it? But I would just say there's a world of things to do out there. It really is. I mean, a job consists of pretty much there's jobs and jobs, but it's pretty much doing repetitive tasks of one sort or another, isn't it? That's probably why we command a certain salary, because we're quite good at doing that same job over and over again, and we've got better at it.
Yeah.
But I would hate to think that was the only thing that I've done over. I've got, depending on your religion, you're only here once.
Yeah.
And that I'd only done that one thing. I've probably done a lot more varied things in the last 2.5 years that I've amassed in the previous 30, just because of the time I've had available. So I would say, grab hold of it with both hands, really.
Could I paraphrase that as say, create a bucket list?
Yeah, probably.
Create a bucket list.
Yeah. First of all, buy your bucket. That's the thing.
Yeah.
Have a bucket in the first place.
Yeah, then go for it. Yeah. No, brilliant. Thank you very much, Mark. Really appreciate your time.
Yeah, I've enjoyed it as well.
Yeah, because I know you've not got a website, a book, or anything. You just literally
I'm not
sharing your knowledge, your experience.
Yeah, I'm not trying to plug any kind of. People have said to me, "Why don't you do a blog or a podcast or something like that?" I said, "Well, I don't come up with enough content. I don't come up with enough share. Nothing's changed for 3 years, so I would have nothing to. What have you done this month, Mark? Well, nothing. I've just let everything just take care of itself.
Yeah.
So
Well, I would love to have you back on in the near future. So,
thanks very much.
Happy to provide that platform for you to share more of your knowledge, more of your experience.
Yeah. Okay, Lee. Cheers.
Thanks, Mark. Take care.
Bye now.
I hope you enjoyed the video, and if you haven't subscribed yet, go ahead and subscribe to our YouTube channel. And you don't have to stop there either. We have more videos on the screen for you and lots more insightful content on our channel and our website, fundyourretirement.com. I want to thank you very much for your time, and I'll see you in the next video. Bye for now.